Welcome to alphacrunching.com. My name is Eric and I'm the creator of the SPX Weekly Options Blueprint, which are time series forecast charts. In this video, I'm going to walk through the latest version of the app so you can hit the ground running right away so that you can start taking advantage of the daily expirations that SPX has to offer. Now let's dive in. We're going to start with the weekly chart, and the first thing we want to do is make sure that we are viewing the latest week available. And we're going to do that by clicking the Choose a Week button. And you'll find there's a drop down to where you can actually go back in time to view previous weeks of data if you want to go back and study or practice. I like to make sure that I'm choosing the most current week, and as of this video, that is the week of January 16th, 2023. Now, each weekend, these charts are updated. So the week of January 16th, 2023 would have been available by January 15th, which would have been that Sunday. So before the trading week begins, you'll have a view of the entire week, and the forecast does not change throughout the week because we are looking at the most recent history to create a forecast for the week. Now let's talk about why the weekly chart is called the weekly chart. It's not a weekly chart in the sense of a normal chart where it includes 5 days all in one candle. It's not that type of weekly chart. The reason why it's called the weekly chart is because the data points that we're going to be looking at add up throughout the entire week. They start at 9:30 on Monday, and this is in Eastern time, 9:30 Eastern time Monday, all the way through Friday at 4 p.m. And one of the newer features we've added is turn the bars on, and I think this is going to help explain how the chart is constructed a little bit better. I'm going to zoom in. You can use the sliders here and you can move the chart over. I'm going to go all the way over to Monday at 9:30 a.m. And what the blueprint does, or the time series forecast does, is we've gone back through the most recent Mondays, typically 4 to 5 weeks, and we look at how much price has moved for each Monday at 9:30 a.m. and we have a proprietary algorithm, so we come up with an average price movement. So for over the last several weeks before January 16th, for the Mondays only, at 9:30 a.m. the average price movement has been 4 points, and this is our average SPX points, and this is the time of day. So these are the two axes that we are looking at. And then we can see that at 9:35 the average movement is negative 1.36 points. And we continue to calculate each individual interval. And again, we are using 5-minute charts of the closing price of SPX. And what we're doing for the weekly chart is for each one of these bars, we add those up over time over the course of the week. So when we see we have a lot of red bars, like in this section, these are negative. So when you start adding negative numbers, it's going to push the line chart lower. And as you know, for this particular increment, it went up and the chart went up. So this is a line graph that shows more of a trend because we're adding these numbers up. And over the course of the week, the market, we see we have some really large bars, and we'll talk about that in a second. But the weekly chart adds up all these individual price values up over the entire week, which is why we call it the weekly chart. Now, the main difference between the weekly chart and the daily chart, if I click on the daily chart, you'll notice that the pattern is very similar. For this particular week, the forecast was relatively bearish early in the week, kind of chopped around a little bit, and was forecasting a move higher towards the end of the week. So this is very similar to the weekly chart. However, there's one main difference, and it has to do with these large bars. The weekly chart is going to include the overnight gap data. Every day the market closes at 4, even though it says 4:10, 4:05. This 4:10 value, 4:10 p.m., and then the next value is 9:30. So this particular bar is saying that over the last several weeks, the average price movement from Monday's close to Tuesday's open is a positive 15.99 points. Let's call it 16 points. So the weekly data is going to include this bar, which is why you get this move up. And we know that the market can be very gappy. Sometimes it gaps, sometimes it doesn't, but you can see another large bar here. And again, that's going to be the average movement over the last several weeks from Tuesday's close to Wednesday's open has been a positive 16 points. So this overnight data, that one increment, is going to encapsulate from 4 p.m. Eastern time to 9:30 p.m. So it's technically not a 5-minute bar because the market doesn't trade. So instead of, just putting however many bars that would be, we've just made it 1 bar, right? That way you just know. So that's why when you take a look at the weekly chart and the bars just kind of help define it, but we can see that the reason why there's these big movements because this is the gap data. Not everyday gaps. Here is a large negative bar. So Thursday 9:30 a.m. So that means Wednesdays to Thursday has been a net gap down. I don't recommend necessarily that you try to trade these gaps. I don't want to recommend that we're forecasting gaps in a particular direction. This is just mathematically what has happened using our formula. And the general idea with that, I'm going to turn the bars off for a minute. The general idea here is to use the weekly chart for potential multi-day trades. So in this particular case, we might look for a buy signal earlier in the week, maybe not Monday. Actually, this week, Monday was closed for Martin Luther King Day, so we couldn't have traded this. But Tuesday, maybe we look for a low and look for a buy signal. And if we get that buy signal, then we can maybe try to take a multi-day trade to the end of the week. I still like to use chart confirmation, which we'll talk about in another video. I'll send you some links. But the weekly chart is added up. Each one of those bars is added up over the entire week and includes the gap data between the days of the week. So if we flip over to the daily chart, the values are the exact same as the weekly chart. However, if we zoom in, we'll notice that at Monday at 4 p.m., we have a value of 0, and then we go right to 9:30. So it does not have that 410 bar because the daily chart, we're really just wanting to use this for individual days. So when you first go to the daily chart, it's going to show you each day side by side, but it's really meant for you to select the day of the week and then get the values for that particular day. So again, the daily chart is going to run from 9:30 a.m. Eastern time all the way to 4 p.m. Eastern time for each day. And then on Tuesday, the very next day or each day, every day is going to start at 0. So we're adding up the values, same as the weekly chart, we're adding up the values, but we're stopping at 4 and we're starting at 0 the next day. So those are the differences between the weekly and daily chart. The daily chart is really meant to view each day individually. However, if you don't have anything selected, it can give you sort of a snapshot. If I turn this off, it can just give you a snapshot saying, hey, Monday looks kind of bearish. Really kind of choppy, and oh, what is this, Friday? Oh, Friday looks pretty bullish. So this is just kind of a snapshot of each individual day set next to each other. But again, it's really meant to look at each day individually. Now let's talk about the term forecast for a minute. The time series forecast is showing you what previous history has done for this particular day, individual day. And if this particular day has been negative, and for this example, for this week, Monday was relatively negative. It was kind of choppy in the morning, and then we saw kind of a downward trend. And this has been the average move for each increment added up over that particular day. And one of the things I look for directional trades, and I typically trade these with credit spreads where I sell slightly out of the money credit spreads in the favor of a trend. So I typically am looking for trend days. So this would be a trend day. One of the things I think that can help is looking at the magnitude of this move. For example, this particular trend goes from about positive 10 points down to almost negative 40. So there's been a negative 30 point move on average happening between, let's call it 10 o'clock and 3 o'clock. So what I would be going into this day with is, okay, I'm looking at I like the 3 or 5 minute chart, and I'm looking for bearish signals, like a sell signal, if you will. I have different analysis, and again, I've made some videos on YouTube that I'll put in the description or in a link depending on where you're watching this video, and I'll look to trade in the direction of the trend. I don't blindly just say, oh, the market's going to go down at this time and here. Obviously, news events can happen, such as CPI reports, inflation, jobs reports, Fed speakers. So I think you still need to be macro aware of some of the major reports, because those can, skew the market into a particular direction. And also leading up to those reports, the market could consolidate ahead of a report and then tank or rally. And a lot of times we see that on Wednesdays when the Fed announces their rate hikes. So there's still some macro awareness you want to be aware of when you're trading. And if we go to another day, let's find Tuesday this week. This to me is not very tradable. You could consider maybe a non-directional trade, maybe an iron condor or something, but there was a couple things here. First, there's no real trend, and what we're not going to try to do is forecast a move from 940 to 1050. This is a very short move, and it's not sustained over the course of a period of time. I like to have a move that's maybe sustained over several hours. Now, maybe you could look for a low later in the morning, and if you get a buy signal down here, then yes, maybe you could ride that back up. But again, the magnitude here isn't very much. It's only 14 points. And if you think about SPX and you look at some of the average moves, a lot of times the average move can be 20, 30 points a day. So really what this is telling me is that there isn't a pattern that's been consistent over the last several weeks. So when I see a day like this, I'm less inclined to trade directionally. And if I want to trade, I might use another strategy or something. But this really isn't telling me or giving me any conviction that I want to be short or long, right? Even though it's choppy with a bearish kind of slant, it's not really, it's not trending. And I want to make sure I'm on the right side of the market, and there's really nothing here telling me what side is right. So I would probably not trade this one. If we look at Wednesday, let's just walk through each week. Wednesday, very similar. You do get a little bit of a trend in the morning, but it's only 12 points. And then it kind of comes back. So again, this to me is very choppy. You have these spikes here telling me that when you average these individual increments, that it's just kind of choppy. Spikes, pullbacks, spikes, pullbacks, spikes, pullbacks. Yeah, you do get, let's call it 11-point average move from this hour, let's call it 10 o'clock to maybe 1 o'clock. But it's only 12 points. That to me suggests that this isn't consistent enough as something that I want to sit in all day. Because let's say you sold an out of the money put spread here. Well, 12 points isn't very much. It could very easily come back down. There needs to be some awareness of this magnitude of what this chart is saying, right? So when you turn the bars off, and if you ignore the average SPX points, you're going to say, oh, there's a trend upwards. Well, if that trend was 2 points, then it's really not a trend in my book. Let's take a look at Thursday. This particular week, very choppy, and it's even more narrow, 6-7 points down, 6-7 points. So this is also 12 points wide. This to me isn't something that I want to directionally trade. If you're an iron condor trader, and maybe this is the day you want to put that on and use your stop, and however wide you want to go, that would probably make more sense to me than trying to pick a high or low at a certain time. Again, it's inconsistent, right? And then Friday this week, actually, this is a much better trend that I would be looking to go long. So on this particular day, I would look for a potential low early in the day. And then if I have a buy signal, and I've talked about different ways how to do this, you can use technical analysis. I've made examples with options flow, Renko charts. I think Heiken Ashi is something that I might start exploring too, where if the market is, let's say the market is chopping around, well, maybe you just want to trade Heiken Ashi candles to the upside. But this is, a little bit more trendy, although it's relatively flat most of the day. But look at the magnitude here. The magnitude is from early in the morning down negative, we'll call that 15 points, 16 points, and 30 points here. So from peak to trough, we're looking at 40 or 50 points. So that's something that I get excited about directionally. Now, there are cases, obviously, that the market might just not trend upward. So that's why you want to use some chart confirmation of your choice. But this is how I view these charts. I think the magnitude, the average SPX point values is helpful, and I'm looking for sustained moves. The longer, the better. Again, when we look at a day like Tuesday this week, this is not a sustained move. This is just chop, chop. And, you know, even though it's net negative, that doesn't mean you couldn't gap up and it be choppy to the upside. It just, this isn't a consistent pattern. And that's what we're looking for using these charts. And another term you could call this is intraday seasonality. And when there is no seasonality, then you're not going to want to trade that directionally. You want something that's a little bit more sustained, such as the Monday. This is more of a sustained downtrend over the course of almost the entire day. And then we can tap on Friday here, Monday and Friday, just so you can kind of see them together. So these are better days, I think, for trend trading. And if we just look at Tuesday, Wednesday, Thursday, just very, very choppy, you know, 10 points, 12 points wide on any of these days. So I hope that helps get you started. If you have any questions, feel free to email me. You can email support@alphacrunching.com, and we'll see you in the next video.